joins us now. So Chakri, we are talking about backbenchers hogging all the limelight right now. So if you're a class monitor, which is the next backbencher which will move up?
Good morning, Nikunj. Yes, it's if you look at the Nifty for year to date, it's up about 8-9%. All the mainline front bencher stocks did nothing. The banking as an index is largely flat for the year, whereas like you rightly mentioned, NTPC and all these companies are actually up 40-50%. So this is partly this new India story which is in the making. And all those new India stocks are actually in the broader market, whether it's power, infrastructure, utilities, all these companies, EPC, infra, cable companies, none of these companies, REC, Power Finance, they're all in the broader market. And they've been a neglected lot. In fact, REC Power Finance is one thing which we got right quite some early on, because it's the same story repeating itself after about 10 years, when power wasn't huge, not 10 years. So after 2006 and 7, when power stocks were really hot, and then they went through this whole restructuring phase. And now, so I think, and stocks which never existed before, sectors like railways and defense, those, because of the government push, I think that again still has enough momentum.
Sure. Chakri, I also wanted to get your view regarding the IPOs, because that's one of the big talking points today. 4 IPOs opening. IREDA is already open till yesterday. It had seen subscription of 2 times already. And today, of course, the big one is going to be Tata Tech. Your view on the recent IPOs, and which would be your top bid? Because right now, you're spoiled for choice. You have 5 IPOs which are open. Where do you put your money?
IREDA is in the same space as Power Finance and REC, and in fact, a much smaller player than Power Finance or REC, and it's attractively priced, and the trailing about 1.2 times trailing book. And the amount of growth ahead for the green industry, green energy industry, whether it's not just power infrastructure and power, green power, but battery management systems, smart metering, smart grids. That the whole requires a huge amount of capex, and therefore the growth path and therefore the loan growth rates for IREDA, which is a much smaller company from Power Finance, will do really well. Again, Tata Telecommunications, again one of the biggest players. Tata Technologies, one of the biggest players in the IT automotive industry, ERD space, growing very, very fast. And that is a higher margin business. It has 2 anchor clients, which is JLR. Some see it as a negative because they are like about 30-40% of their service revenue, but that's a good thing because it provides them with what's the latest happening in the EV business, and therefore that's also a very good IPO.
Let's also get a take from you as to what the outlook is when it comes to rural-facing companies. Reports seem to be indicating that the demand for the rural front is improving, but the full recovery will continue to take some time. What would be your assessment?
If you look at the volume growth for any FMCG company which rural-facing, it's been 0 to 5%. So the volume growth has not come back. Forget about pricing part. That's not even there anytime, not even there on the radar yet. So I think, that still needs, as far as some of the Unilevers are concerned, they're anyway priced very high. So I think it's still time to go for the volume growth to pick up, the top line growth to pick up for FMCG, which has still not happened. And so I think still as a space, I think we would continue to stay away.
Why has Colgate done so well, Chakri? I mean, it's one of those companies which has got a monoline business, which is only focused on one thing, oral care. They have not moved into any other line of business. Marico has moved out. HUL has got a diversified portfolio. Colgate has just been an oral care company, and they've got challenged by just about every other category player. But yet the stock has given a fantastic 40% return this year.
Indeed, in fact, like what Basin was saying earlier, I think that as the stock has continued to do a few other things really well, not just in India, but worldwide. When you go into a hotel anywhere around the world and where they have the toothpaste there in the hotel room is usually a Colgate. So their institutional penetration distribution networks are exceedingly strong. and their market shares, they've always maintained their, what do you call that, retail management. As in, when you walk into a store, one of the first toothpaste that you would find on a shelf would be all the various Colgate brands. So I think brand management, shelf management, institutional penetration, and of course the company itself has managed its operations worldwide exceedingly well. I think so. There's nothing new they have done, as you rightly said. It's this same old toothpaste, but selling it in new and better ways.
Okay, fair enough. Meantime, Chakri, wanted to also get in your take as to what the outlook is within the entire infra basket. Do you believe that with the kind of impetus to growth that sectors related to capital goods, engineering, infrastructure, cement, etc., are on a general upswing, and where is it that you're finding preference within this space?
The cable companies like Polycab, Nagarjuna Constructions, because they do the construction work. L&T, of course, is the big boy in the business, will benefit. Companies which we never used to talk about in the past, which is railway and defense, whether it's Tata Wagons or Texmaco. I think Texmaco, in fact, is doing a QIP today. After that fundraise, the company will be far better capitalized and its multiples will look far attractive. And, these companies are not just doing railways. They're also getting into some of the high-tech areas like drones. So the whole infra space is expanding. The definition of infra is changing very fast. And power. Now, for example, IREDA. Now, smart battery management system companies. So this whole space, I think, will continue to occupy a very good amount of investor space because it's still very underrepresented in the indexes and will continue to do very well.
In fact, Texmaco Rail will be in focus on account of that QIP that you talked about. But, Chakri, you also have to take on board that it's a huge bit of dilution that's happening. The company is raising 750 crore with a market capitalization of almost 4,800 crores, telling you dilution is going to be almost 15%, and that's coming in at a discount of 13%. So do watch out for Texmaco Rail if you can pull up that chart. In fact, let me go across to Kunal to get a chart check on this one. In fact, Texmaco, Kunal, what would be your recommendation if there is a dip? And the other one I want to talk about is Raymond as well.
So, Texrail, in fact, many of the railway stocks over the last few weeks have started to show signs of recovery. Now, I think last week I was mentioning that...
Kunal, actually, we'll just come back to you because there is some audio issue there. But let me just go across to Chakri and get a sense on Honasa as well. Mama's Q2 earnings will be out today, and ahead of that, that stock was mighty excited. Chakri, your view on the likes of Nykaa and Honasa?
I think, they'll see fairly good earnings, given that the festival season that we've just had. On account of that, there is likely to be a pickup in demand. And therefore, I think the earnings, hopefully for the companies, will be better than expected. In terms of margin improvement, maybe a little bit for Mamaearth, but not so much for Nykaa. Nykaa still has to deal with a lot of very high levels of debt. And I think that is where, but the valuations for both of the companies are still very expensive.
Oh, the valuations are still very expensive.
At what levels would you start buying staples again? Because they've consolidated for 2-3 years now.
Yeah. If you look at, you just mentioned Nestle or even Colgate, all these companies, they're trading at 55-60 times. The ROE, to support those kind of multiples, is also at about 70-80 times. So they can support those kind of multiples. Now then, what is needed to accelerate those re-rate those multiples further upward is product differentiation. None of these companies have really done nothing much in the last 2-3 years of some brand winning category which everybody wants to buy. There's nothing new which they have come out with. And then on top of that, the rural urban penetration is fairly there. It's doing it 5-6% growth. Rural income keeps going up and down based on the monsoon. This year it has been weak. So I think these are the factors. There is those big X factor which will actually provide that extra acceleration or extra push to earnings. And therefore, I think it's still trading water.
Fair point. Here's something interesting. And, talk about perception and talk about market price is a function of EPS into PE. EPS is what managements always focus on. P is what market gives it. Now let's look at Titan. Titan currently is commanding P multiples which are the highest in the industry. 70 times. Kalyan Jewellers 45 times. Senco Gold 24 times. Ethios 46 times. I'm comparing pure jewelry companies here with the watch company here, but just to give you a sense that Titan, even though it's a large company, market cap of 3 lakh crore, for that kind of a market cap to command a P of 70x, I think is absolutely phenomenal. Let's look at some more examples of Tata Group companies. Trent again is trading at a premium which perhaps is the highest in the industry in terms of what the average retail stocks are commanding. You can compare that with DMart, but DMart is a fairly illiquid stock, largely because of concentrated holding. There you go. Now that's TCS for you. We'll come to retail, but that's the Tata comparison in the IT space. TCS is trading at a P multiple of 26 times, Infosys 22 times, HCL Tech 21 times, Tech Mahindra 22 times. Again, the sector is going through a downturn, but Tata group of companies there again are commanding a very lofty kind of a premium. Consumer names. Tata Consumer does not have the highest ROS, but the P multiple what Tata Consumer currently is commanding is 54x 1 year forward, which is again the highest in the industry, and it is comparable to India's biggest FMCG company, which is HUL. And Trend, well, what can I say? You could rub your eyes and say that Trend is commanding a P multiple of 100 times 12 months forward. So Chakri, it's a trend, but it's a trend which tells you that the belief in Tata group of companies is absolutely staggering.
Yeah, you're absolutely right, Nikunj. I think, they have that brand value, when they do these valuation studies and they assign a certain amount of the overall valuation to the brand of a company. That way, Tata has that strength of the brand. Now, individual companies, various companies that you mentioned, yeah, except for maybe Trent, because it's done so well for itself in terms of product differentiation, but at 102 times, whether the margins of the retail business support it, it's unlikely. But the others like ABFRL, Aditya Birla Fashions, etc., are all struggling in just getting their product mix right, and therefore Trent has been the winner. Now, as far as the other businesses, now TCS is again the highest margin, being higher margin versus Infosys or HCL Tech, and therefore it can do that. Now, in terms of Tata Chemicals, Tata Chemicals is now trying to get into the businesses which will help it in the EV space and in providing the chemicals which are necessary to make for battery storage. The chemicals, so that's a benefit. So I think they're doing these various things which will also cater to the new India, Titan. Now, they've diversified their jewelry into various accessories, catering to new Indian aspirations. And so I think, they have been very good in reading the changing face of India.
Let's get a move on then. Chakri, thank you so much for taking time out and joining in. That's the pre-open rate for you, and 19,000.